Good morning, traders. Welcome to the Elliott Wave Street weekly update. I'm Juan Maldonado, and it's a pleasure to start the week with some of our wave counts. Here is the euro. The euro has been moving up after last Friday terrible news about the Silicon Valley Bank that is melting down, that is not being able to let its clients to get their deposits back, and that's creating a huge panic in the US financial industry because a lot of participants are protecting their money. So we are seeing the euro moving up, the pound moving up, the dollar Swiss moving down, the dollar yen moving down, the bond market in the US, the price of the bonds moving up and the yields moving down, because clearly investors are looking for safer places to have their money rather than the US banks, which only protects them till 250K in case of if the bank is unable to respond for the money. So wow, what a week, what a start of the week. But the thing is that probably the Fed or the US government during this week, they will do something to bring money back into the US and to calm down the markets. Anyway, as Elliott Wave traders, as technical analysts, our job is to actively trade the markets, to get in, get out, make some good money, and follow trends or go against the trends depending on the bias or the setups that we are looking for, and that's it. But it's important to understand that this is an important week. So let's start here from the daily chart on the euro. The main plan is simple. We have already a leg down in the corrective for the corrective second wave. We're seeing a pause for the X, and I'm looking for another ABC for the Y. And from there is where it could be interesting to start looking for the end of 2, to start following the trend up, to start following the move up, and that could be the beginning of a big wave 3 after the completion of the second wave. In the meantime, my bias is bearish, and that's what we are going to talk about on the lower time frames to find the end of this corrective wave and sell it, and the plan is to sell it and just follow the leg down after that. So it's pretty simple. The plan here, it's pretty simple, the setup. So let's move to the lower time frames. The hourly chart could be good. So far we have the price moving down strongly, and that could be the wave 1. But the wave 1 actually becomes valid after we have in front of us wave 2. Without wave 2, we don't have a wave 1. That's a common mistake that beginners currently are making when trying to use the Elliott wave theory, because look, this is not a wave 2 yet. Let me draw how a wave 2 looks like. Wave 1, A, B, C for wave 2. Then we have some rejection and the price moves down after that. Of course, the place where wave 2 is going to finish is not going to be related with any Fibonacci level, because that's crazy. If I start drawing Fibonacci levels here, of course the price, if ends, is going to move back down from any of the levels. So of course it's not like that. It's more looking the shape of the pattern rather than trying to find logic with crazy levels. So clearly the euro is extremely bullish, and it probably will take out this high. So if the price, and that's the highest probability, if the price comes above this area and rejects, that's where I would like to try to sell it, because we're not having right now the shape of a wave 2. The wave 2 should be completely different, A, B, C. You can see the difference in the slope. This thing is a continuation pattern. It's not a corrective wave, it doesn't make any sense. Anyway, let's see if we have the high to sell the euro. The plan is to get this week to the 105.20 area. On the other hand, let's say that we don't have a rejection. Let's say that the price here departs with the green candles breaks up this area and keeps trending higher and higher, right? That could happen, you know. If panic continues today, that can happen. Of course, under that scenario, we are not selling because the price never rejected, right? That's the plan. Let's have a look at the S&P. The S&P has been fantastic. We have been short. The bias has been short. Let's have a look at the daily chart. On the daily chart, I have been looking for weeks for price on the S&P to come back to this area. So finally, we are pretty close to that area. I think we're gonna make it. The price on the S&P hits the 3,800 today, and from there is bouncing. I believe it's just a retrace to continue lower. The plan is to take out this low, and right here is where we are going to find out if it's a good idea to invest in the S&P for the longer term. Because if the price, let's say, that comes down here and fails to continue lower, and we have an accumulation process on the lower time frames, and we see that demand is acting in this area, we are going long, and we're going to change the bias then to bullish, to have the price coming back to these previous highs, right? But on the other hand, let's suppose that here the market collapses and makes a black day and sell-offs strongly, and let's say that takes out this low, right? That can happen as well. We are in hands of the Fed, we are in hands of the US government, we are in hands of the banks. So of course anything can happen. So that's why in the meantime, we should just keep the selling bias, the short bias. And if we have a different story happening and developing here, we can start thinking on bullish. On the other hand, it's just a bearish, bearish, and bearish. For now, I'm going to keep my bearish bias. So today the price is just building a corrective wave here, looking for some sort of ABC to sell it and follow the trend down. I think we're likely today to have a bearish day on the S&P. Oil, working fantastic, traders. Let's recap what we have been doing here in the Elliott Wave Street analysis. I went short here. Then I booked some partial profits, as always, and everything. I tried to short here again. It was a break even. I short here again. It was another break even. And here I didn't trade because it was moving up too fast and the price was likely to take out the high. So I let the price run. At the rejection, I sell it here, right? And I have been letting the trade run. Has been a beautiful trade. I believe on oil, we're likely to break down this area. That will be good for inflation as well. So I'm keeping the bearish bias, but when we trade at the market extremes, when we have a bearish bias and we short at the market extreme, we have a huge advantage, right? If someone has a bullish bias, well, he's going to buy at the market extreme on the other side. And even if the trade doesn't work, let's say that makes something like this and then moves down, the trader has a good time to book profits and to have a safe trade during that bounce, right? So trading at the market extremes when the price rejects is one of the best trading setups that you can find, and you can apply it with any strategy or any type of analysis. In this case, we're using it under the Elliott Wave theory. If you want to learn more about the Elliott Wave theory, if you want to get our daily analysis, on ElliottWaveStreet.com, you can sign up. You will get immediate access to a world of fantastic setups or fantastic analysis. And under the membership tab, you will find our plans. We have the Forex, the stocks are the full access. So you come here, you read what it comes on each of the packages. You select the one that you like. We have a special offer of $19 the first month, so you can trial the service. You will get immediate access, and also includes education, some basics of the Elliott Wave theory, the Elliott Wave Street crash course, the volume profile course. And this month, I'm launching a new course, like in a couple of weeks. In 2 weeks, we're going to have the class about the Elliott Wave blocks. That is something new that I develop to find the waves in a more objective wave, and not using Fibonacci levels or those type of levels that don't work. So we are going to have this beautiful class coming up. So it's a good time to sign up for the Elliott Wave Street membership. Thank you very much for your time. Please have a fantastic start of your week. I'll see you soon. Take care. Bye-bye.